Hi everybody, it's Wednesday, November 19th, 2025. Let's start with our first headline. Nvidia earnings beat. Their earnings per share and revenue was higher than expected. And as I record after hours, we're up almost 6%. And that's around 197. And when we take a look at the Nvidia chart, that is about right here. So not yet, that's not a higher high yet, but a large gap up for the moment. I was under the impression that maybe this would be the earnings report that wasn't strong enough to send it even higher. For now, it is higher. I'm also very interested, what it's going to look like in a week from now. Second headline, Fed minutes were released today, casting doubt on a December cut. Headline from the New York Times, December rate cut in doubt as Fed fault lines deepen, minutes show. And the Fed funds futures dropped back into a 73% chance of no cut for December from yesterday's 58% chance. In the CME was actually closer to 50. Cut or no cut longer term, it doesn't really matter unless we start to see that, priced into the slightly longer duration. The 2-year still is essentially completely flat, meaning, well, yeah, there's no cut in December, but the markets are still very strongly expecting a cut the next month. And the following cuts are still in play, looking out 2 years. And similar thing going on in the 10-year Treasury note yield. All the 2-year and the 10-year are saying right now is that they're not surprised by that, and nothing's really changed. Third headline of today, jobless claims data vanishes. Where did you come from? Where did you go? My Monday or Tuesday morning flash update talked about the Department of Labor apparently accidentally releasing October's week of jobless claims. I say apparently because suddenly it's gone. These numbers were here. You can watch my video. There were even, AI automatic articles being printed about it. The numbers popped up on investing.com because they're linked to this data. It extracts it and puts it up automatically. And now it's gone. And tomorrow we should be getting a real report of some kind. I don't know how many weeks of data we'll be getting from the jobless claims, but I'm wondering if that data that did come out was correct or not, or like completely made up. Did someone press a button wrong? Like, what happened there? Very interesting. Whether the numbers are right or not, it was clearly an accident that they got posted. So where did you come from? Where did you go? Jobless claims. And fourth headline, bullish and bearish signals today. When you look at credit markets, metals going flat, big shadow on Bitcoin to the downside, looking actually bullish, along with Nvidia's earnings coming out strong enough to get the market excited. Like I said yesterday, I am seeing, the market overall, S&P 500, my crystal ball rating shows lower high, still probable. We'll go through those charts, take a glance at them in a moment. Before we get there, community topics, what moves, if any, did you make today? Robschild sits on hands. Coming up tomorrow morning, we have an unemployment report, highly anticipated, highly important. We are months behind on this extremely important information regarding the labor market. We also get AM Walmart earnings. Tomorrow could be a very, very interesting day in markets. We'll see how it all pans out. Also, leading economic index. This has been just absolutely plummeting at a faster and faster rate, and typically can signal, hey, we're going into a recession. It's been screaming we're going into a recession for a while. We were supposed to get this report tomorrow. I'm unsure if it's going to be released or not. We also officially are supposed to have, it's Thursday tomorrow, we are supposed to actually get some kind of jobless claims report. We'll see what happens with that. Remember, we've been missing at least 7 weeks of those reports. Don't forget about those tariff updates. Thank you for watching, liking, subscribing, commenting, and supporting Robschild. No changes to the bull ratings. And see my free website, link in the description to read through my daily reminders, macro views, portfolio explained, and stock research center. Onto the charts, starting with SPX, the S&P 500. We went essentially flat today. We're up 0.4%. And in the after hours with the Nvidia, earnings report, we're up about 0.5% in after hours, which puts us right about here. As we go through the rest of the charts, I am seeing this play out the way I described yesterday, a lower high. It looks like the stock market is going up. Any reason for markets to get bullish, the markets will take it. And one really important part of this to remember is that sometimes the market will go up in order to gain a larger amount of higher priced exit liquidity, meaning those entities of institutions that want to be dumping stocks, dumping shares of things. Sometimes the move up can be to make that happen, to make more money at a higher price. Insiders of many corporations have been selling hand over fist. Another reason we can get a bounce is, short squeezing. There's been an increase in the purchasing of puts lately. So why not make sure they're going to lose and just, get a bounce here? It would make a lot of sense. And every chart today supports that, in my opinion. And with that said, it's probably just going to be a bounce that finds a lower low after that. One of the reasons, headline from the Daily Shot, more than half of global equity benchmarks slipped below 50-day moving averages. And once you get below the 50, the next big one for a lot of people is the 100-day average. This is one of the many reasons I think that this is a bounce, and we will go lower. But for now, Google Trends, all categories, all trends, what is on literally everyone's mind. Everybody knows about Nvidia stock. Your neighbor, your mailman, the cashier at the grocery store. Everybody wants to know what's going on with the Nvidia stock. What could possibly go wrong? I want to emphasize this is Google Trends, all categories and all trends. And this is a stock here. Again, we're going up and then we're going to go down further. More stocks went down than up, says the advanced decline line today, even though the S&P 500 was up slightly. The VIX cooled off a little today, but still over 20. And the VVIX also dropped into rising uncertainty zone above this red line here at 120. Panic zone. We were in panic zone on Tuesday. Now we are back into rising uncertainty zone. Like I said earlier, credit spreads going flat. This can act as support for the market. But one thing I noticed too, HYG divided by Shire, remember this is a fund of specific junk bonds. It's not like the entire market. A better way of measuring this more precisely is on the Fred website, high yield spread here. And I just wanted to mention when we scroll in to the most recent data, which is actually updated yesterday, we broke to higher highs in the spread here, which is different than what the HYG divided by Shire chart looks like. This down day, October 10th, we're still above that, but the credit spreads on Tuesday actually were wider than October 10th. So higher highs and higher lows are not a good sign in the junk bond credit market. So if the market's really just going to get bullish here, there's some heavy lifting to do. So, but again, why I say there's a bounce. Yesterday's green candle with a large shadow or tail to the downside or wick to the downside, that's a very bullish signal. After dropping like this and having a tail, it means the bears got beat real bad on Tuesday, and it's acting as support now. Until we get an actual close below 89,000 right now, we have to have a close at 7 p.m. Eastern time. We have to have a close below this candle right here in order to confirm that Bitcoin is actually going lower. I know it felt like Bitcoin was falling off of the face of the planet today, but this is actually bullish. We should actually be going again back up to 97,000 still. This chart supports this move, and Bitcoin is it's the ultimate, it's the most predictable chart, really. And one thing about Bitcoin that we need to remember is that it's purely, or a very pure way of looking at people's risk tolerance. And it's not tied to anything. It's not tied to the price of copper, the price of gold, interest rates. There's no earnings. It's just a measure of risk appetite more than anything. And so it has been a very easy chart to read and to be able to predict. And as the stock market often follows Bitcoin, I'm still expecting it to play exactly out this way. We rise to 97,000 before dropping to lower lows, along with the stock market finding a lower high. Yesterday's fear and greed index I thought was at 11. It says previous close was 10 actually, but still at 11. Extremely, extremely, extreme fear. I will repeat with all of the attention on Nvidia, yet still extreme fear. There's a bounce here. Like I said at the beginning of the show, everything's saying the same story here. The dollar, though, interesting chart of the dollar today. I have been saying on the show the dollar looks very bearish because we had crossed a major trend line that was acting as very obvious support. We broke below it. Well, now that I'm looking at it, we never got a confirmation candle, did we? So I guess that's why. We never confirmed below this. We ripped back above it today. We're at 100.11. So I'm not seeing this as bullish or bearish right now specifically, but interesting for the dollar to rip higher today. My guess is that the markets are seeing, it was probably mostly because of the Fed minutes not being too dovish and therefore allowing the dollar to rise. And then the major commodities basically flat. Crude oil, completely flat. We're just going flat. What else can you call this? Same in copper, basically completely flat. Same in gold. We've been going flat for 3 or 4 days now. There's been a good amount of sideways chop in this range, around 4,100. Next up, XLP, consumer staples. I noted on Monday how this large red candle to the downside looked like very bearish. Like, what else does this look like? It's very easy to see. It's like a roller coaster. You go up, you go down, you go up. I said it looks like we're going down. And again, today that proved to be the pattern still developing. And lastly, Target came out with earnings. Disappointing markets, and then not disappointing markets midday. Target was actually up on the day. And let's measure this out real quick. Intraday, we were up 1.24%, but then closing, it says right here, down 2.77%. I couldn't tell you if people are going to continue to sell Target to a lower price, or maybe this is a double bottom here, but the lower it goes, the more greedy I get and the more I'll be buying of it myself. Just as a quick side note, for those of you who are like me and believe that the future involves buying everything online and just having it to your doorstep and there's no need to have retail stores anymore, remember that at least half of the human population, I'm not going to say which half, but at least half of the human population has a very natural desire to go just look at stuff. Trust me, retail shopping is not ever going to disappear completely. As long as humans exist, retail shops will exist. Anyhow, that's all for today. That's all for me, my crystal ball. Hope you enjoyed. Thank you for watching and see you next time. Robschild.